Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Wednesday, August 10th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. You're watching this video on YouTube. We appreciate it if you like and subscribe. You're checking out our website here if you need anything. I've had a lot of people reach out about the platform that I use, that Blue Line Edge here, for mapping and measure and everything. If you'd like to take a demo of it, if you're using like an archaic platform, you're using a platform you just don't like, you want to try something new, you're on a stock platform, you want a dedicated futures platform, we got that right here. You can click on try out a free demo, put in your information, you'll get a free 2-week trial on the demo here, and it comes locked and loaded, set up the way that we have our platform over here. It's got all the same indicators and everything. I think the only thing you don't get is ICE data, and it might be on a delay, but definitely enough tools and resources for you to make a decision if you like that platform or not. Getting into the markets here today, we did have some things coming out. So highly anticipated, very dovish report. Risk assets back on right now to the upside. Only market that's really down here, the dollar index and the energy markets. Energy's faced another larger, you had an API build, and then you also had an EIA build on crude oil today. So crude oil pulling back, but I do like the deferred contracts out there. So getting into the data here, you got CPI month over month came in 0.0, forecasted 0.2. Dovish on that reading. Core CPI 0.3 versus 0.5, dovish on that reading. Even year over year was a little bit lighter, so real feel-good moment. A lot of celebrations going on out there. I don't know if you were justifying that kind of move, but definitely we did see most risk assets poke back up to the upside. Getting into a couple things here. So the gold market, again, that new resistance, we broke through it here today. We'll look at that more interactive chart. Got up to about 1825 on the chart, 1817.30 last. Key support now, that 50-day moving average. Also key support down 17, about 82. I think that if we came back and we broke down, you missed the upside of the market. I think that that's kind of your new entry point. We are going to put out those reactionary numbers. If you miss the upside breakout, or if you miss something like right back here when you get that DMI plus crossing over minus, you get stochastics rising, you are up over 30, so it immediately goes from a extremely bearish chart pattern to an extremely bullish one. If you miss that kind of move right up, a lot of this corresponded with the rollover right here. We'll give you those reactionary numbers, so new levels to buy in case you missed it on the upside, and we'll have updated ones every day. So just let me know if that's something you need. I did see earlier news today, Goldman cut its 3-month, 12-month, and 6-month forecasts on gold. They originally had $2,500 across the board. I think that was put out when we were still quite dovish. We were understanding what the ramifications were of the Ukraine-Russia conflict, and then also the Fed had not made any rate hikes yet. They're bringing down those numbers here, 1850. Kind of corresponds with where we're at, where we're going here in that 3-month time frame, and then 1950 going forward. I think that cites when the Fed pivots. You also want to keep an eye on the dollar index, key levels of support and resistance. I'll get into that one in a minute. We did see the dollar index break down. So trend following system's flat. We need to get a close on December over 1820.30, and it'll initiate a buy. So watch on the settlement here today. We close over there, system's going to get long. The stop loss probably be in that 1750s, depending on how much volatility is there. You'll notice that the settlement here will match where the settlement buy is on that, and then we'll keep track of the performance on the positions. Looking at the commitment of traders report, we did flip to positive from greatly negative. Biggest short position in 3 years, pop out to the upside. Now we're on the positive side. And then speculative positioning, I outlined this. Once we get that negative, tends to capitulate, and we see generally has resulted in above average forward returns. One other thing on the gold market I saw was 13 out of the last 15 years. You pick up gold on August 11th, you sell it out right at the start of September. It's gone up those 13 out of 15 years. I can get you some data on that if you like that too. Getting into the silver market, old support, new resistance. We broke through that today here on that dovish report. So going down to silver, 2096 last, right on the highs of the day. A lot of people, we pulled off some of that silver coming in this report. Remember, this thing could have went the other way, and you would see gold, silver, risk assets all selling off greatly. we'd probably be down somewhere around here. So we'll get you some numbers on the reaction. I think 2050, nice level here at that 50-day moving average. Below that, 2017. This is on the December basis. I think those are some key levels to be in. Now the system is long, got long at 2076. That's on a December contract. Front run that a bit on the September one. It's been long, a couple of days prior, back down in the 2050s. Sell trigger 1908. I wouldn't risk it all the way down there. I think that's too much risk. Look at some of those support levels. So you go back to here. There's your support level. We close below this candlestick right here. I think you get out. I think we're going to run back down to the bottoms. Product analysis on silver. It's negative. Won't be surprised with this move upward. We see more people coming out of gold, going into silver, going into some risk assets, leaving some of the safety. That the gold-silver ratio, this is when COVID struck that March low. Silver got down to 1176. That's when we were 120 ounces of silver to buy 1 ounce of gold. Here is this was a Sunday night. It was the night that they killed bin Laden. Silver peaked at $50. And then we were exponentially higher than the gold market. And that's when we hit that recent low. So these are your two extremes. I drew a 50% retracement. Comes out right around 75 to 1. I know people will argue it should be 40 to 1, 60 to 1, 20 to 1, whatever. I'm just trying to keep up with modern times here. Those are the two extremes that we've had. I'm just running this kind of analysis. So I wouldn't be surprised if we got a little stretched on silver. We start coming back down into this area right here. So pushing back down to copper. Copper, 371.20. Keep an eye on that level. Breaks out below that. It's going to take this from a bearish trend. So if you draw a line coming across here to more of a neutral trend. And then also we got the 50-day moving average. You really want to see this number break away. DMI plus break away from minus. The ADX turn up. Stochastics remain in that overbought territory, confirming that we're more in a bull market at the moment. Key fundamentals to take away: that cup and handle formation, tightening warehouse supplies. We shoot out a report on those Shanghai and LME, the stockpiles, and we look at that like every day. That's also a key driver to the prices. So the trend following system is actually short still, all the way from significantly higher. It was like this breakdown, but that'll neutralize it and it'll get out. I didn't want to start posting that, that it's been short for a while here. So crowding analysis, managed money is net short. Wouldn't be surprised if you don't see a short covering on that as well. People want to join in on the NASDAQ and everything else. I'm not saying that risk assets are going to stay elevated for a long time, but that's definitely the general consensus here today. Looking at the platinum market, platinum pulled back, almost gave some people some re-entries here on the January contract right around 926, 926.30. The low was 926.60 on the platinum market. So getting into that chart here, this is the January one. I was looking at some re-entries on the buys, but it was right near this low. And it didn't happen. So this chart I think looks really good. You're getting the DMI plus and minus widening. MACD crosses over. ADX is strengthening. Stochastics pushing the overbought territory. Really your buy signal came back here, and it's going to be right where this kind of crossover occurs. So about July 27th would be your initial buy signal. And then I think further confirming it was this breakout buy right here. So stay long on platinum at the moment here. If you're out of it, we'll look for that buy back in. Coming down on some other things that I wanted to point out. Oh, they did say that short term that platinum was overbought, so buying that pullback, not a bad idea at all. Crowding analysis, short 12,000 on those contracts. I wouldn't be surprised if that one gets a short covering as well. Looking at the growth, inflation, and policy model that we get here from one of our partner sites here, Springtide. They put this out. You could see we've got this low growth, low inflation. Just means that inflation's backing off. Growth is coming off as well. Kind of gives you this Goldilocks theme here. That's why all the risk assets are going up. But be aware, as we get into the fourth quarter, it's going to go into deflation where both of these are going to be decelerating here. And I wouldn't be surprised if you don't see sticky inflation holding on a little bit longer. So pushing it down here. I got gold returns versus various, 87 flash crash, global crisis. Gold is the purple bar chart right here. You can see a positive in all those different levels. Now this one is the one that I want to highlight. CME Fed Watch tool prior to the CPI release. This is your 75 basis point rate hike expectation, 68.5% versus 31 for a 50. Look what happens after you get that dovish report. Bam, flips to the opposite side. About a 75% chance that we only get 50 now, 25% on the 75 basis point rate hike. Here's your dollar index post CPI. So the breakdown through the 50-day moving average, I think that was key. Now, a lot of people hate moving averages. I hate moving averages. People just watch stupid moving averages. So I think it had something right here. You got this flip over in this breakdown. So you're going to see stochastics turn down. I don't know what's going on with this dollar. For those of you long, might have to throw in the towel if we get that close below it. For those of you short, great day that's going on here today. And then we've got the futures performance data and everything else, key correlation matrix. We'll update all this. And then if you want to check out, if you're not a current client of us, we're going to set it up so you can get a small trial on this particular report. Just let us know. And then also on the reaction report, we're going to start sending that out as well. If you need anything, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.